I did an exit in early 2018 and then launched a market making company. And usually people ask me, Anton, why a market maker? Because you ran a crypto exchange. It's because when you run a crypto exchange, the first day you learn the most important lesson is that without liquidity, the exchange cannot grow, the exchange cannot scale, all the tokens are liquid and nobody trades.
There is one aspect that I kind of want to talk about, and is about institution and retails, right? So when you are talking about tokenization of real world assets, and are you selling or are you talking to an audience, a community of institution, or can you talk to the retailers as well? And what are the implications of that?
You're now asking the very important question of distribution.
Today, we unpack the concept and reality of real-world assets tokenization. In reality, tokenization is not new. You probably heard of security tokens, which were very popular in 2018, but they never went anywhere because there was no legal and regulatory framework. Now, in this current bull market, we come back with this big buzzword, tokenization of real-world assets. The potential market size is in the hundreds of trillions of dollars. But anything in theory that has value can be tokenized and brought on chain. But there are big challenges that must need to overcome to actually make tokenization a reality. And tokenization of real world assets and any assets is really the future of how we are going to be trading and also exchanging assets, because it brings so many advantages, for example, in terms of ownership, in terms of cost, in terms of transparency, and potentially greater liquidity because allow more participants to get involved in the ecosystem. But as we said, there are lots of challenges and we are not there yet. To unpack this, I invited on the show Anton Golub, global entrepreneur, investor and leader with over 10-year experience in crypto. He has got some really strong points, and he also helped me to better understand the challenges behind the implementation and integration of tokenized real world assets. And I really hope that this conversation is going to be useful for you as well. If you have any question or anything that is not clear or anything that you would like us to unpack and discuss more, please feel free to reach out to me at steffi@financialfox.news, or you can always leave a comment on YouTube or a DM on Twitter. We are basically everywhere. Saying that, make sure that you follow our profiles on the social media, so that's where you can always stay updated with our news and cool interviews. And finally, I'm gonna ask you a big favor. I know that many of you are watching the show, but you are not part of the community. So please click the subscribe button. Your support is so important to us. We want to grow our community, and in order to do more compelling discussion, bring in some really cool guests on the show, I need your support and I need your engagement as well. There is a lot that the Financial Fox is doing to bring education to our community, but also thought-provoking discussion, which is what excites me most. So I hope to see you in our community and be more engaged with us. Finally, something very important, all the content on the Financial Fox is for informational purposes only. Sometimes I share my opinion, the guest share his opinion, but you should never act at the back of somebody saying something. You should always do your own due diligence. Remember to get educated with any kind of decision you are making, especially when it comes down to investing, trading, or putting your money somewhere. It's very important that you know what you're doing, and there are lots of opportunity that you have to skill up and learn about anything that you want to get involved. So super important, get educated. That is basically my best advice, and don't take anything said on the show as financial advice because it's not.
Hi, Anton, how are you?
I'm doing very well. Thank you for welcoming me and great to be with you together.
Yeah, fantastic. So you post an article on LinkedIn a couple of weeks ago where you were saying that tokenization of real world assets is failing. And that obviously got my attention. And I said, okay, everybody is saying that tokenization, real world asset tokenization is basically one of the biggest things that is going to change finance. And we see actually so many projects, they are getting involved trying to build things to tokenize physical assets, to tokenize financial assets. And then you're bringing a point, say, actually, we are not there yet, or this is can actually become the hundreds of trillions of dollars market that everybody is talking about. I wanted to discuss this today, but before we get into this hot discussion, please tell us a bit about yourself and how. I know that you have got over 10 years experience in crypto, which is quite amazing. I got in 2017 and you were like a super OG. So yeah, tell us a bit about yourself.
Yeah. So first, thank you very much for welcoming me, and it's a pleasure to discuss with you such a provocative topic like failure or failing of real world assets. And to give a bit about myself, like a very brief one. Originally, I came from traditional finance. So I worked with a big hedge fund in Switzerland as a high-frequency trader. So something very exciting, very cool. I really enjoyed it. But then I like to say that I was at the right place at the right time. So that means that in 2013, I co-founded the second ever crypto company in Switzerland called liquidity, with a vision to build a digital asset exchange on top of the blockchain. And the reason why all this resonated with we started, that one of the first crypto startups in Switzerland. The reason why blockchain so much resonated with me in cryptocurrencies on top of blockchain is because I actually knew how finance works in the real world. In a sense, so to give you an example, I was a trader, a high-frequency trader. So that means we traded in milliseconds, extremely fast, But when I would go to talk to my colleagues or to the counterparties, and when we would talk about settlement of all of these trades that we thousands and hundreds of thousands of trades that we did during the day, then you would learn the settlement takes 2 days or 3 days or even more. And then you would think like, wait a second, how did we end up from milliseconds, trading in milliseconds, to settlement that lasts several days? And obviously, if you come from traditional finance, the problem in the background is how finance system works. So that means in plain language, there is something called batch-based settlement that runs in daily cycles. So it means all of these transactions that I did, during the day extremely fast, that will be put in a queue. At the end of the day, the systems, among the banks and the counterparties, the exchanges, they would kick in, they would process all the transactions, and then we would move forward. And obviously, this is a catastrophe, this is a disaster, but it works like that because it was built, the processes were built in the 70s, in the 80s. When we were digitizing how paper trading and paper transactions would work. So when I saw the blockchain then for the first time and realized you can have actually tokens that represent assets, and then you can do atomic swaps. So that means at the same time we do swap of these assets, and it can be extremely cheap and extremely efficient and extremely fast. Then for me, it immediately resonated like blockchain will change the world. So then, we launched the Liquidity. It was back then a big, massive success story. So one of the oldest and biggest crypto companies in Europe, hundreds of thousands of clients, huge team, 200 people, offices over the world. So really, really great experience. I did an exit in 2018, early 2018, and then launched a market making company. And usually people ask me, Anton, why a market maker? Because you ran a crypto exchange. It's because when you run a crypto exchange, the first day you learn the most important lesson is that without liquidity, the exchange cannot grow, the exchange cannot scale, all the tokens are liquid and nobody trades. And back then, in 2018, it was a big problem because there was not a lot of professional market making companies like you have today. So it was, for me, seemed like a big opportunity and a no-brainer opportunity. So I launched Fluff Technology, or so Fluff Tech, that I was leading for 5 years as CEO. So crypto market maker, market making all of your top tier exchanges. I'm sure you and the audience know about, and likewise, market making for a lot of projects. So when a project issues a token, they need to have a market maker. The exchange will not list them unless they have a market maker. And the market maker needs to provide liquidity for the token. So we were market making for some of the world's largest projects in the world, but likewise for a lot of early stage small ones, so kind of all shapes and sizes. And I did an exit in 2022, summer of 2022. And then I was kind of reflecting, what I want to do next, where is the big opportunity. We had this always dream of tokenization. Everybody says everything of value will be tokenized, and it really resonates with me. Like, I think it totally makes sense, and it's a big, big opportunity. And then we launched together with my co-founder, Mike, we launched Swiss Asset DAO, which is an initiative formed as a DAO, so formed as a decentralized autonomous organization, where we enable crypto native companies to invest into tokenized real. So in there, we really, I really learned the hard way how tokenization works, how challenging it is today. And when I say that tokenization of real world assets is a failure, a lot of people would say, Anton, why would you say that? Like, that doesn't make sense. And I think a lot of people would kind of be puzzled by this is because they don't know how tokenization of real world assets works today. So a lot of people imagine it that you somehow create a token and that token represents the real world assets, and everything is fine. And it turns out that's totally not the case. This is not how tokenization of real world assets works. It's very complex. It's very costly. There's a lot of legal uncertainty, and that's why it's not scaling. Yeah.
Sorry if I interrupt you. Yeah, just to unpack that for us. People use this buzzword, real world asset tokenization. I think everybody uses it, from like influencers and, to founders that want to get in the space, from investors, they invest in something that maybe they should dig a little bit deeper into the fundamental of that. So unpack the reality of actually you can tokenize assets, digital assets. So maybe start with real world assets, and then maybe we can go a little bit more into the funky things with some, financial asset. How does it work today? Where we are?
So I will explain to you how it works today, and I think then it will explain why we're not actually tokenizing real world assets. To give you an example, let's say you want to tokenize something as simple as US government bond. So U.S. government bond is the liquid, the most popular, the most well-known financial instrument in the world. And big institutional investors, small investors, they all buy U.S. government bonds. It's secure, it gives you some yield, and it's a very well established. I will explain to you how this tokenization of of the U.S. government bond works today. So first, to tokenize U.S. government bonds, you have to actually set up something called a special purpose vehicle. As soon as I say these words, people's minds explode. They say, what the heck is a special purpose vehicle? But you can just think of it as a fund. So it's a fund that will buy the US government bond. It will hold the US government bond, and it will manage all the cash flows and everything that needs to be done for that government bond. So we already have one structure in place actually there. This special purpose vehicle is usually in an offshore jurisdiction where it's very tax friendly and kind of has a good financial infrastructure. So this is your Cayman Islands, British Virgin Islands. So you will hear a lot of islands now that I'm talking about in Guernsey, Jersey, or so on. So all of these kind of funky financial centers, that all these islands that we sometimes hear about, this is where the special purpose vehicle will be, and it will buy US government bond. And then the tokenization happens is that you tokenize the share unit of that special purpose vehicle. Because special purpose vehicle, you can think of it as a company. It's not really, but it's kind of like a shell company with shares. This is the share unit. And then you tokenize these share units and bring them on the blockchain in the form of a token. So this is how tokenization of US government bonds works today, actually.
Okay, because there you are kind of getting a bit, it's not complicated, but you asked me the question of, in 2018, we were all talking about STOs, right? And you're talking about setting up an SVP, special purpose vehicle, in an offshore jurisdiction. So is there a reason to kind of like circumnavigate some kind of like legal implication? And also, if you tokenize the share of a company that invests in securities, is basically that kind of like the evolution of an STO, or are we talking basically about security assets?
Actually, so first to unpack, to kind of take a step back, actually, when you are tokenizing these share units of the special purpose vehicle, you're actually creating what we call security tokens, But here, I think substance is more important than the form, because form is that it's a company with shares that you tokenize, but the substance of the company is to hold a real world asset. So if we would just tokenize a company itself, so let's say you have a startup that's doing business, generating some revenues, and then we tokenize the shares of that company and put them on the blockchain, that will be a security token, how people would imagine. But in the context of my example of tokenizing the US government bonds, substance is more important than the form. So yes, from a form perspective, you're tokenizing the shares of a particular company, which is a shell company, in our offshore jurisdiction. But the substance of this process that you want to bring US government bonds in a very complex way on blockchain. So this is actually the kind of like the difference between the two. And usually I get the question here asked is like, Anton, why don't we bring US government bonds directly on the blockchain? So because that is like, then you would not need your special purpose vehicle. So let's just break it direct. First, you have two problems here. First is if it's even legally allowed to issue a bond directly on the blockchain. And the second, would the US government do that or not? And do you have the infrastructure then for the people who usually buy US government bonds to actually be on the blockchain if they're issued directly on the block? And the answer to both of the question is no. You don't have the legal certainty, you don't have the legal favor to issue US government bonds directly on the blockchain. And more important, the US government will not do it because they have the investment banks, they have the pension funds, they have the sovereign wealth funds, they have all these players, but they're all in traditional finance. They're not on the blockchain. So to sell US government bonds, you have to be in traditional finance.
Gotcha.
And that's actually the challenge. So usually I'm a very provocative saying real world assets are a failure, but usually then in the end, I add the solution to really make real world assets scale is on-chain issuance and recording of assets. That means when the asset is created, it's actually created on the blockchain and nowhere else. It's natively listed. Second, legal certainty and legal clarity for those tokens of assets that are directly issued on the blockchain. And then the third most important, a secondary market and liquidity.
Yeah.
That's actually where because I usually say it's a failure, but people catch that, but they usually don't catch the right term and what's the solution. So just to repeat, direct on-chain issuance and recording of real-world assets on the blockchain, legal certainty and legal clarity, secondary marketplace, and liquidity.
Okay, so brilliant. Let's focus a little bit on the security law. From what you said, we kind of like saying that basically there is a lack of a legal regulatory framework, or perhaps some jurisdiction are taking more a friendly approach and allow you to do something, some other they are still falling behind. So you mentioned obviously the island as, the place to do the SBP. I would like maybe you to expand a little bit more on what you think are the jurisdiction that has been, are more developed in this sense. Why you mentioning the island, first of all, and I think perhaps what are the hurdles for that framework to be in place?
Okay, so all of these interesting islands in the Pacific and somewhere else that I mentioned, they're there really to host the special purpose vehicle. They're not so more or they're less important for tokenization, but they're more important to call the special purpose vehicle because these islands are offshore financial centers where everybody sets up special purpose vehicles. So that means they have the service providers, they're tax optimized, operationally optimized, they have the infrastructure around it, so you can set up this special purpose vehicle there. So that's why but they're less important from a tokenization perspective.
Okay.
Because for tokenization, you need to have the right laws. And to make it very clear, there's very few jurisdictions that they around the world, so very, very few, that enable you to do direct on-chain issuance of assets where you don't need these SPVs, you don't all of these papers, all of those documents. You don't need that. It's just direct in the blockchain. And for instance, one of them is Switzerland. The other one is actually Liechtenstein. So, and literally what people have to, because sometimes people think like, okay, but we live in US or we live in Europe, why can't we do it there? And I usually tell people you literally need to change the laws to do on-chain tokenization and on-chain issue or assets. And that's very difficult because whenever you have to change a law, it has to go through parliament. The politicians have to discuss it. They have to agree. This usually takes 1-2 years to pass through parliament and the people agree and approve change of laws. And Switzerland did exactly that. So sometimes in 2020, the whole discussion started around let's change the laws such that people can directly create tokens, which are security tokens that represents real world assets, and that they can do that directly on the blockchain, and that they can have legal clarity, legal certainty, they know how it works. And then that took for another 1.5 years until it went through the parliament and all the politicians agreed, so it was approved. But this is basically what I'm trying to explain is like, we know what's the solution now, but the challenge is you literally need to change laws in many cases. And a lot of people have tried to also experiment, can we do it under existing laws? And usually it's not clear, or I think it's not possible at all to do it under existing.
Okay, super interesting. So there is one aspect that I kind of want to talk about, and is about institution and retails, right? So when you are talking about tokenization of real world assets, and are you selling or are you talking to an audience, a community of institution, or can you talk to the retailers as well? And what are the implications of that?
Yeah, so you're now asking the very important question of distribution. This is how it's called in finance, distribution, to whom I can distribute or promote and sell the product actually, right? And obviously the big two categories are retail and institutional investors. These are clear separation, and it's very difficult to sell to retail. And it's not so easy, but not that difficult to sell to professional institutional investors. It's a bit easier, So, but now let's first address the institutional investors, to make it very clear, no institutional investor would ever buy tokenized real world assets the way they're done today. Because imagine I come to an institutional investor. So let's say I come to a big hedge fund, big fund in US, and I told them I have a tokenized US government bond for you. And they do their due diligence. They ask serious question. How does it work? And then I tell them, well, actually, you have this SPV somewhere in the islands, and then this SPV somehow will buy the US government bond, and then we will tokenize that with some jurisdiction. You will get this token in a wallet. By the way, you don't even have a wallet, but we'll have to set up a wallet for you. And you have to move assets into crypto. So you have to maybe buy stable coins so you can buy this token. And we don't really know what this token represents because there was never legal precedence. So there was never legal precedence. So if something goes wrong, how it works. But this is my token. Would you like to buy? An institutional investor would answer, Anton, I already have an account with Goldman Sachs. I can buy US treasuries today at super low cost with legal clarity as much as I want. I don't need your token that represents an SPV in an offshore jurisdiction that holds the US government bonds. I don't need that. I have an account with Goldman Sachs, with the biggest investment bank in the world. I snap my fingers and they buy US government bonds for me, and I have them in my account. I don't need wallets. I don't need stablecoins. I don't need none of that. My point here is that I'm trying to make is that the real world assets can be bought today normally through securitization process or directly to your securities account with your prime broker or whoever is your counterpart. So institutional investors can already buy real world assets. They can buy them directly. They don't need these complex tokens and SPVs and wallets and stablecoins with all the risk that it comes. They can just buy directly those assets on chain. So yes, you can pitch to institutional investors, and like I did as well. Like I was, educating them, telling them, but the answer was always clear. Anton, I can always do that directly. Why would I buy a token that represents, it's not clear what it represents. By the way, there's a lot of fees and complexity in this process with SPVs that are described. So they will never buy. When it comes to retail, you have 2 points. First, that it's extremely challenging to sell to retail because you need to get approval from the regulator. And then you have to talk about the risks. Are these risks appropriate for retail? Are they too high risks? How you can distribute to them, pitch them. This is so difficult, extremely difficult, that in many cases, you need to have a banking license, for instance. In many countries, you need to have a banking license to sell to retail. So imagine a crypto startup that does tokenization comes to an investor and say, by the way, we also have to become a bank. We'll not take deposits, we'll not do anything, but we just want to sell the tokens to retail. So it doesn't work. Or you need to partner up with another bank or a licensed service providers who will sell these tokens to retail. But then they're again taking risks that maybe they don't understand.
So what are those companies out there doing tokenization actually doing?
So you have to now actually answer who is buying those tokenized.
Yeah, exactly. Who is buying?
I kind of answered the question. Is like who is in the crypto world and cannot open a securities account with Goldman Sachs?
Okay.
It's the crypto native companies. So I'll give an example. Lots of people don't know this. The biggest real world asset investor on the planet is a decentralized finance crypto protocol called MakerDAO. So imagine a DeFi protocol is the biggest investor on the planet in real world assets. And why they do that? Because they have a token that gives yield. So they need to get yield somehow. And how do they do that? Well, they invest into US government bonds, which gives them yield, and then it goes back to the token holder. So this is actually like the unbelievable part, that the only target client segment today for tokenized real world assets are crypto native companies, because they don't have access. They don't have normally access to real world assets because they're these crazy crypto companies. Nobody knows what to do with them in the normal. So they then buy these tokens that are share units in an SPV that hold the US government. So it's only crypto native companies. But then the question now is, why would they even buy? I mean, talking about the future, like why would they buy real world assets? I mean, in crypto world, you can, you buy a few tokens, they go up 100% in a week. So how does an 5% yield on a US government bond compete in a bull market, by the way? So we're in a bull market objectively now. How does it compete with something that gives you 10% or 100% return in 1 week? So there's a competition now between all of these tokens that are going up in value because we're in a bull market, and you have this low yield 5%, 8%, 10% coming from this tokenized real world assets, And the funny thing now, what's happening is actually that the amount of liquidity in tokenized real world assets is actually going down. And it makes sense, right? Because people are rotating from these low return products and they're putting capital into the crypto world back, they put it back into the tokens because, this we're in a bull market, everything is going up.
So the problem of liquidity, it looks like from what you said that there are only a few players, basically a few whales, they are exchanging the tokens between themselves. How can you scale any kind of like tokenized assets, or how do you actually build the liquidity if the players are only in a niche market, which is, crypto native? How do you break these barriers? Do you have to wait that Goldman Sachs create their own chain tokenization? Or is there actually anything that is sustainable that can be done within the crypto space?
Yeah. So first, I think we need to talk about two things. One is liquidity coming into the product, into such tokenized real assets. But the second thing is then liquidity for the tokens itself.
Yeah.
And first, I have to say, we have to create attractive products because creating a tokenized real world assets where it's highly liquid, you invest, you get some yield, but then you cannot get out. For instance, if you invest in tokenized real estate, this is a product where you put in money, maybe you get it back in 5 years, 2 years or whatever. So first you need to create a very attractive product. And this is actually because you're competing with other products in the crypto world. It has to be high yield, to be high yield. And then even more important, you have to be able to easily get in and out of that product, because it cannot be that you invest into it and then you're locked up for 1 year. 1 year in crypto world is like 10 years in normal world. So it has to be something, that I can easily get in and out. But then even more important, I always puzzle that people don't think about the liquidity of the tokens themselves, that they are traded. So for instance, if you have a token and you want to sell it, that you just click a button and it's sold on an exchange and we're over. And here I'm so much puzzled, and it's so unbelievable that whenever I talk to people in who do tokenized real world assets, I tell them, but what about the liquidity of the token? How is it going to be liquid? And they say, no, when you tokenize it, it becomes liquid, because it's fractions. And I say, but come on, I was a market maker. I know it doesn't work like that. You need the market makers, You need market makers to provide liquidity at all time for these tokens in order, for them to be liquid, And I think this is just lack of education in the crypto world. They don't understand where liquidity comes from. They think somehow liquidity comes from retail or some random people, No, it's from professional companies. Market makers, their job is to provide liquidity. That's how they make money. But then the question is why crypto market makers don't provide liquidity or don't want to provide liquidity for tokenized real world assets. And the answer is actually very simple, is because tokenized real world assets in many cases are financial securities. So if you touch them as a market maker, you have to become a regulator. And imagine, you're a crypto market maker, you would do all of this amazing stuff in the crypto world with very low regulation, which is good for you, right? You're very flexible. And now somebody comes to you and says, I have a token for you, has no interest, nobody cares about it, nothing. And now please come become a market maker. And when you do that, you have to become a regulated broker dealer, because it's many cases it's security token. Those are financial. Obviously, no crypto market maker would do that. They're not crazy. They run a business. The action and the profits and the revenues are in the crypto world, and they're not in market making for tokens.
There is another point that I wanted to discuss with you, which is about assets identification and valuation, because we are talking about tokenizing a physical asset or a real world asset, bringing it into a digital asset. And there is a process of, first of all, identify the assets, and then the asset changes and the asset change valuation. So how that connection between the real world assets to the digital assets is going, and how do you guarantee verifiable authenticity, for example, to back those tokens?
So the authenticity of the tokens comes from two perspectives. One is the on-chain one. So one's the one on the blockchain. So once the token is on the blockchain, how do we understand what's happening there? How do we know what's the price? And there, a very important stakeholder in this process are something called oracles. And people coming from the crypto world might have heard about oracles, which is, for instance, the most famous one is Chainlink. It's literally a company that provides external data to the participants on the blockchain. So this is when it comes to valuation. This is when it comes to, what the asset is, like that we have assurance that, we're dealing with the right thing. And on the other side, you have to have an insurance with regards to the stakeholder who is holding the asset in the real world. So this is your SPV. Usually you have an administrator, you have an auditor, you have all of these stakeholders around the special purpose vehicle to make sure that the entity actually holds the assets, and that's their legal liability, that they need to make sure that everything is in order when they manage the SPV. So these are kind of like the two parts. And this is the two parts.
So finally, how do you see the space moving forward? I mean, you kind of are showing us all the challenges and say we are not there yet. There is a lot of things that has to happen in order to make tokenization a viable solution and be integrated within the trade fight. What are the things that you're looking for, or you think can make a change, and we can actually integrate this amazing concept of tokenization of assets?
Yeah. So first, I want to say there's a lot of companies in the real world asset space that are doing an amazing job. And I can mention something like Ondo Finance, Open Finance, MakerDAO, Maple, Clearloop, PV01, for instance, Actionariat here in Switzerland, so Obligate. So there's a lot of interesting companies doing great things. But I think for our job as a crypto industry, when it comes to real world assets, our job is to create attractive products that people want to buy. So if you create a product that's garbage that nobody wants, of course it will fail. This is normal, by the way. So we need to create attractive products that people want to buy. So high yield, legal clarity, security, secondary markets, liquidity. So this is what we need to do or as a crypto community. What we need to work outside of the crypto world is we need to convince the regulators to join us in this, vision and change laws. We have to work with the governments. We have to work with the regulators. We have to change laws. We have to do it gradually. And it will come, it will happen. Switzerland did it already. Liechtenstein did it already, which are kind of a little bit the front runners, the leaders, the pioneers. But we need to work on this around the world with everyone. And it's going to be a challenge because some countries are openly hostile towards crypto. So in US, I'm not telling you like a big secret. In US, it's very difficult if you're a crypto company because the US regulator is going after many of these crypto companies. Rightly or wrongly, I'm not the judge of that, but obviously it's clear that it's very challenging. But it's really, the answer is simple. Let's create amazing products. Let's work with the regulators. Let's work with the politicians. Change what needs to be changed, and then real world assets will be a massive success.
Brilliant. How long do you think it's going to take?
Decades. Not because of us, but because of the, it's normal. Politics is slow, right? In politics, politics is not a startup. In a startups, if you realize something is not working, you change it the next day because your survival is dependent on being agile, on adaptation. But if you're a politician with a 4-year term or a 5-year term, maybe you'll see the world. And also, as a politician, you have risks, right? You don't want to do something that will upset your voting community. So maybe you don't have less appetites to move forward faster. But I think if politics and laws and regulations move a bit faster, I think there's a huge upside there.
Okay, Anton, thank you so much for coming on the show. I think it was, you shared with us some really great insight, and think that actually anybody in the industry should reflect more on when, you enter a space. You don't just do it because there is a lot of hype around it, but you need to kind of unpack all the moving parts and then understand, is there something viable that I should, and feasible as well, that I should get involved in? I mean, we want more people to get involved. You mentioned some amazing companies that are doing great work, but as I said, it's always about dialogue with the industry, with the regulators, with the politicians, with the investors as well, and create that kind of ongoing discussion that helps things to move forward. And so eventually we will get there. Somebody, I think, said it's going to take 15 years from a new assets to get adopted. And maybe we are 10 years still to go. But let's see how long it's going to take. Anton, thank you so much for coming on the show.
Pleasure. Thank you very much for welcoming. It was awesome.